You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the deep dive. So today we're diving into a pretty dense global market and geopolitical briefing. It's for Friday, October 24th, 2025. And we're not just skimming. We want to really understand that link. How market moves connects straight back to all the high-level talks and trade friction happening right now.
Yeah, that connection feels tighter than ever, doesn't it? What jumps out from the sources is just how much policy risks, geopolitical uncertainty is filtering into everything. Finance, trade, it's everywhere. We're going from the dollar being pretty strong, almost hiding some deeper issues, straight into a really crucial week for diplomacy. Big talks coming up.
Okay, let's start with that financial picture then. Currencies first. The dollar's holding steady, maybe a bit firm. Mostly seems like people are waiting for that US CPI number. It got delayed, right?
That's right, delayed CPI. So markets are kind of paused, and you see the euro, it bounced earlier on some PMI data, but it gave that right back.
And sterling?
Sterling's just treading water, really. Still near those lows we saw after the last UK inflation figures.
Right.
So yeah, the dollar's got a bit of an edge. But it's all about policy divergence, isn't it? Different central banks doing different things, especially clear when you look at Asia.
Ah, the yen. Good point. It popped up near 153 for a bit. It's quite weak. What's keeping it down when everyone else is hiking rates?
Well, it's classic, isn't it? You've got inflation picking up in Japan. September numbers showed headline and core both accelerating. But the Bank of Japan still sticking to that ultra-loose policy. So that gap, that policy divergence just stays wide open. And the market sees it, thinks the BOJ is okay with the weaker yen to handle the rate differences globally.
Okay, so divergence driving the yen. Meanwhile, China seems focused on keeping things stable. The PBoC set the yuan midpoint at 7.8928. Looks like managed stability there.
Definitely managing it, putting some friction in to keep it in check.
But speaking of less managed situations, we had a bit of a jolt closer to home yesterday, didn't we, with Canada?
We certainly did. Dollar Canada spiked pretty sharply for a moment there.
Yeah, after President Trump just declared trade talks with Canada were, what was the word? Terminated.
Terminated, yes.
Yeah.
Quite a headline. Caused an immediate wobble in the FX market.
But hang on, can we really just dismiss that as noise when it moves a G7 currency instantly?
Yeah.
Isn't that political risk becoming the macro driver now?
That's a really sharp point. And you're right. Okay, so the pair did settle back down pretty quickly. Maybe the algos took over, focusing on oil prices or whatever.
Right.
But the incident itself, it's a huge flag, shows how fragile confidence is. Political talk isn't just background noise anymore. It's an immediate market risk. Bang. Instant impact.
And that volatility, that risk, it leads us right into commodities, I guess, because that's where this uncertainty gets physical, costs real money.
Precisely. Look at crude oil. Okay, it's easing back a bit now if they're rallying on sanctions news. Good for drivers, maybe.
For what?
But the key thing, the really critical takeaway, is compliance risk. The headache, the cost of just making sure you're not accidentally breaking sanctions rules, that's soaring all through the supply chain.
Okay, explain that more. Compliance risk.
Yeah.
Why is that suddenly such a big deal? You mentioned Indian refiners looking closely at bills of lading. What does that actually mean on the ground?
It means they're worried, really worried about getting hit with secondary sanctions. If you process oil, even if you didn't know it came from a sanctioned Russian company like Rosneft or Lukoil.
Which the U.S. is targeting.
Exactly. If you get caught, you could be shut out of the U.S. financial system. So checking that bill of lading, that official shipping paper, it's extra work, slows things down, costs money and legal fees.
So it's due diligence overdrive.
Total overdrive. That's regulatory instability, gumming up the works of physical trade. We're even hearing Chinese state oil firms might be pausing some Russian oil purchases coming by sea.
Wow, okay, these aren't small adjustments then. Big operational headaches, got it. So quickly wrapping the markets, gold's down a bit, around 40-60 an ounce.
Yeah, on the back foot, yields are firming up a bit with that stronger dollar tone, so gold feels the pressure.
And copper, still looking strong.
Copper's interesting. Still holding up near that big $11,000 per ton level. It's partly supply worries, but also maybe a slightly better risk mood. Ahead of all this diplomacy we need to talk about, it seems like the market's hoping for something positive, perhaps.
Right, let's pivot to that. The policy drivers. Trade, tech.
Yeah.
This feels like the core conflict. Washington's gearing up for a Section 301 investigation into China's promises from the 2020 trade deal.
That's the big one, Section 301. It's basically Washington laying the legal groundwork. It doesn't automatically mean new tariffs.
That it could.
It absolutely could. It gives the administration the legal justification and, crucially, leverage if they decide to act later. Maximum pressure, you could say.
The timing. Right before the big meeting, the White House confirmed Trump and Xi are meeting next Thursday in Asia.
Confirmed next Thursday. Part of a bigger trip. Stops in Japan and South Korea, too.
It's just kind of jarring, isn't it? Threatening a trade probe one minute, scheduling a summit the next.
Welcome to 2025 diplomacy, I suppose. That contrast is exactly what we're seeing. But amidst the conflict talk, you've got to watch the cooperation, too, because that's shaping the future economic blocs.
Like U.S. and Japan.
Exactly. They just agreed to work together on AI, next-gen telecom standards.
Yeah.
That's not just friendly chat, that's strategic. Building a tau-sphere, kind of separate from Beijing, drawing lines in the sand on tech standards.
Meanwhile, the actual negotiations sound tough. The U.S. trade rep is heading to Malaysia, Japan, South Korea.
Right, and we're already hearing signals, like from Seoul, saying maybe they want a smaller U.S. investment deal than what was offered. Definite sticking points there.
And how's Beijing responding to all this pressure?
Publicly, it's all about calm cooperation. China's commerce minister was out emphasizing dialogue, promising lower barriers for foreign investors, avoiding that zero-sum talk about foreign investment, trying to sound open for business, maybe counter that trade hostility narrative.
Interesting contrast. Okay, let's quickly loop back to North America, those tensions with Canada. More than just that FX spike.
Oh, yeah. It's turning into action. Canada's retaliating now by cutting tariff-free import quotas for some U.S. automakers.
What?
Ottawa's been critical of where car companies are shifting production capacity in North America. So this quota cut, it's a targeted shot back. Shows the trade friction isn't just U.S.-China, it's becoming more complex, more multilateral, even hitting close allies.
Okay, broadening out again. Global hotspots, domestic politics. How are things looking at Eastern Europe? There was talk about using frozen Russian assets for Ukraine.
There was talk, yes. EU leaders discussed it, using the proceeds from frozen Russian state assets to fund a big loan for Kyiv.
But did they agree?
No agreement. And that's critical. It highlights a huge problem. You have the political desire, get money to Kyiv, fast crashing against really fundamental legal principles about sovereign assets.
So legally very tricky.
Extremely. The European Commission's just been asked to look at options, so don't expect that money anytime soon. Big legal questions, dangerous precedents potentially, still very much up in the air.
In U.S.-Russia. Washington's still applying pressure through energy sanctions.
Yep, keeping the pressure on the energy sector. Moscow tends to downplay the impact, but the sanctions are there, and the White House is making it clear. Any Trump-Putin meeting depends on seeing real steps towards peace first.
Okay. And the Middle East? Sounds like some careful messaging there.
Very careful. President Trump stated Israel won't be making moves on the West Bank. And U.S. officials were quick to warn that any missteps there could mess up the really sensitive Gaza diplomacy that's ongoing, walking a very fine line.
Got it. And quick check on the Americas. U.S. denied those reports of B-1 bombers near Venezuela.
Denied the bomber flights, yes. But they did hint at possible future action related to narcotics trafficking, so keeping that region simmering, you could say.
All right, let's shift focus hard now to Asia's domestic strategies. China first. What's the big picture there? Feels like a new policy phase.
Definitely looks like it. The focus seems less on just export numbers now and much more internal, building up the real economy, boosting domestic demand, and really pushing for faster breakthroughs in key technologies.
Like what specifically?
They're naming them AI, semiconductors, quantum computing, biotech. It's a very clear signal. They're aiming for strategic self-reliance in these critical areas. Whatever happens with the U.S. trade probe, this seems like their long-term direction, doubling down on tech independence.
And Japan, what's their domestic focus?
Interesting contrast. Japan's prime minister laid out a strategy really focused on affordability, helping households, and the approach is explicitly economy first, then worry about fiscal policy later.
So both big Asian players are looking inward, focusing on internal restructuring.
In different ways, yeah. But both prioritizing major domestic shifts. And that's going to reshape their place in global supply chains, regardless of trade deals.
Okay, let's try and tie this all together. We started with the dollar looking firm, copper holding its ground, kind of stable on the surface.
Right, looks stable in places, but underneath, that's where you see the real story. That stability, like the dollar being in its range or the yuan being managed, it's kind of masking profound instability elsewhere.
Like stability where?
Regulatory instability, especially in compliance for supply chains. Think about that oil trade headache we discussed. Huge uncertainty thanks to sanctions. And then there's friction in the actual trade rules, the mechanisms themselves, like the Canada quotas, the potential U.S.-China tariffs from Section 301.
So the future of trade is tangled up in legal compliance and these specific sector fights.
It really seems that way. It's a messy picture. Policy risk is just elevated everywhere because you've got this U.S. probe, the tech containment efforts, and all these leader meetings next week all intersecting. It's complex, high risk for anyone navigating global business right now.
Yeah, definitely a dense environment.
Which leads to maybe the big question for you to think about. We see China and Japan both focusing so intensely on their domestic economies, right? Core tech, affordability. So how likely is it really that these big diplomatic meetings next week can actually fix the deep systemic trade imbalances? Or are they just going to be about managing the immediate tensions, keeping a lid on things for now?
That's the question to ponder. So things for you, the listener, to keep tracking. Definitely watch the dollar's reaction when that delayed U.S. CPI finally lands. See if crude oil's pullback holds or if sanctions bite again. And critically, look for concrete results, not just photo ops, from that Trump-Shin meeting next week.
Exactly. Keep connecting those dots until the next deep dive.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.